Hello everyone, welcome to the new video of Decoding IPOs by Finance and Investment Cell of Kirori College. So today we will be decoding IPO of Aris Infra Solution Limited. The company was founded in 2021 and they run an operating business in construction materials market business, and their aim is to simplify the process of buying and selling the construction material. So what does the company actually do? So it makes and supplies ready-mix concrete, which is RMC, and crushed stones that are used in construction. And the company is based in Ahmedabad, Gujarat, and they work with private builders. They have common projects and with other infrastructure companies. So that was about the company, and it's a B2B company. And now coming to the IPO details. So the IPO opened at 18 June 2025, and the IPO will be closing on June 20th, 2025. The face value per share is 2 rupees, and the issue price band is 210 rupees to 222 rupees per share, which is highly overvalued, and we will discuss later on in the financials why. And then the lot size is 67 rupees share, and the total issue size, as you can see, company is issuing 2 crores 25 lakh shares, which is aggregating up to 500 crores, and all these 500 crores is a fresh issue, so all the proceeds will go to the company, and it's a book building IPO. The IPO will be listed on both Bombay and National Stock Exchange. And now coming to the dates. IPO open date was 18 June 2025, and IPO will be closing on June 20th, 2025. And the reference will be allotted on June 24th, and on the same day, the shares will be credited to your demat account. And on 25th day, the IPO will be listed on both Bombay and National Stock Exchange. And now coming to the financials of the company, as you can see, from the year 22 to December 24, we can see an increase in assets. And for the revenue, as you can see, from year 23 to 24, there was a sharp decline in revenue given the company is only 4 years old and it's a fairly new company. So there was a decrease in revenue. And as you can see, the profit after tax in the previous 3 consecutive years, the profit was in negative, which means the company was facing huge losses. It was only this year that company has generated a bit of profit. And same with the net worth, as you can see from March 22nd in 23rd, the net worth declined, but it grew therefore. And from reserves and surplus, as we can see, in 22 and 23 reserves were negative, but in 24 and 25 reserves were positive. And total borrowing of company has increased from 273 crores in 24 to 322 crores in the recent financial year. And now coming to the key performance indicators, as you can see, the debt to equity ratio is 1.45, which is slightly risky. As you can see, debt is fairly more 1.5 times the equity, and you can see return on net worth is negative 13.14%. And as you can see, the company has a high PE ratio, which makes it highly overvalued. The company, they are issuing the IPO at a valuation of 1800 crores, but the company is, fairly new. They are just 4 years old. So we will come to later what other advisors say this. And as you can see, EPS of the company is in negative. It's minus 5.30. So now what would be our final verdict about the IPO? So about the our final verdict, firstly, aggressive valuation. The company has an upper price band of 222 rupees per share, and the company trade as 206 times to 273 times their earnings to EBITDA, which is considered steep. And advisors such as Devin Chosky research team, though they termed it as we should avoid this IPO based on the valuation match. And now coming to the negative past cash flows. So the operating cash flows have been negative in prior years and there have been high receivables. Third is the competition and scalability challenges that company was faced by global and domestic competitors. And then is the cyclic and concentrated revenue of the company. 81% of the revenue comes from Maharashtra, Karnataka, and Tamil Nadu, and 45% from top 10 customers, which is highly skewed. And lastly, construction business industry itself is very risky, and the default risk is very high. Many customers in this business they take materials and credit, and they may not pay on time. So So as we discussed that construction industry itself is very risky. Payments can get delayed and projects can stop suddenly. And since you can see because of the concentrated revenue of the company, a slowdown or a client loss could hit its revenues hard. And moreover, high receivables of the company make it more riskier because default risk is very high in this industry. Many customers in this business, they take materials credit and they may not pay on time because of other macroeconomic factors. Now, what would be our recommendation for the long term and risk tolerant investor? You can subscribe modestly. The company has strong setup growth, and given the tech adoption in India, the potential company could thrive. But our short-term, recommendation would be you should avoid this IPO because of high valuation and limited listing gains, and due to macro and cyclic uncertainties. If you are bullish about the Indian markets, then you should, avoid this IPO because firstly, it's highly overvalued, as we saw P is highly high for this company. And yeah, and past 3 years the company was having negative profits, and it was only in this year that there's a bit of profit. So yeah, that would be our final recommendation. You should avoid this IPO in short term. So thank you for watching this.